welcome to what's always a fun Friday. Jeez, not hoping it's the end of the week that early, but it's been a great busy morning, which probably is why it feels like it's a Friday. But congratulations to all the AMD shareholders or anyone who was taking semiconductors or really anyone who's invested in the market. Period. It's been just an absolute fantastic time where I'm just taking a look here to see. Yeah, up 29.1% as of right now on AMD. Congratulations. Now, as always, we're going to have a chat going, and I'm here to answer your guys' questions. There we go. I see the chat up there, so I have that open. We're just getting going now, so I'm going to go through the markets just a little bit, go around the horn, show what's going on, and then we will go and see your guys' questions. So I'm going to do a little screen share here and grab the windows and this guy right there. So here's the S&P 500 inside day. Really interesting that we had a pretty big sell early in the morning. Went back right to highs. Now we are at the high of the day trying to break through. IWM already broke through today's high. So we're seeing a big push up in small caps across the whole small cap landscape. It's great for small cap players out there. And then the Qs was lagging a little bit early, but it's starting to recover. So far everything is at all-time high, or not, yeah, well, all-time highs and today's highs in through here. So we're seeing it all across the board. Even RSP, which is our equal weight, which has no big cap tech weighting, that's doing well. So all the way across the board, right? The reason I show small caps is because there's only 100 names in the Qs, and they're all going to be somewhat in that technology-ish sector. And then the IWM, there's 2,000 names all across the spectrum when it comes to biotechs, which have just been on fire today with XBI right off the gate doing well. XLV is holding us back just a little bit, but XLF doing well. Really kind of an everything across the board type of rally, and a good day to be involved in most stocks out there. So again, just to remind everyone, in case people are coming in late here, put your questions in the chat and we'll end up going through and taking a look at those individual names if you guys have anything you want me to look at. Now, part of the thing that I do every week that I was super excited and hitting refresh on the weekend for is look at the commitment of trader data. However, I think the commitment of trader data requires government employees, and your guys' government shut down. So we don't know what the positioning update necessarily was from week to week. However, something tells me that they haven't covered all 150,000 net contracts that they have been short and have been shorting as we've been going lower and lower. So if that is the case, which I think it is, then it means that there's still more short covering to come. And we're seeing this kind of across the board. Everything that has a pretty high short float in it has been doing really well. So we saw IONQ today, one day doing fantastically. One day and IONQ. There we go. Right. A little bit of a pullback. Everyone thought that the quantum computer story was over, and turns out not at all. So we're getting a pretty huge bounce here from there as well. So nice bounce to new all-time highs on IONQ. Same across the board, right? Rigetti didn't really pull back. That's doing well. QUBT, that one is even doing well, and this is one of the dogs of it. And then QBTS, that one's doing fantastically as well. So across the board, when it comes to quantum computing, which I look at as this is the most speculative of the most speculative names and things that you can do in the market right now, because this is just all on a wing and a prayer that quantum computers are going to be a thing, because they're still up for grabs whether or not that's going to whether they're going to be viable as something that can be done. But if they're going to be viable, you're also taking the bet that it's not going to be your Microsoft or your Google or Meta or something that figures it out, a company with billions of dollars cash on hand. It's going to be something completely different, in which it's going to be one of these tiny companies that no one's ever heard of and makes no money. They're going to be the ones to figure it out. So I see some questions coming in. So make sure, again, you're chatting and asking whatever you want me to look at. Microsoft is the first one. I think when we're going to go look at Microsoft, you have to start looking at the MAGs, right? So MAG 7 has actually been underperforming just a bit. For those who don't know, this is Roundhill who comes up with this ETF, and it's just the Magnificent Seven, right? It's the big guys out there, all of those names, and it's, I think, an equal weighted version of all the Magnificent Seven, and you would expect in this market that's cranking new all-time highs pretty much every day that this would be doing great. You can see since mid-September, we've gone nowhere in the Mag 7. So again, it just shows that there is some amount of area in which is outperforming that's dragging us higher, and it's not necessarily the entire Mag 7 anymore. For perfect example, right, NVIDIA is down today, whereas AMD is way up. And AMD is not in the Mag 7, where the other one is, right? So we need to understand that there's rotation happening under the hood. That being said, Microsoft is doing very well. It's breaking out of this base right here. It's been kind of hanging out between this, call it, 520 and 500 for a very long time. It's been chopping back and forth, consolidating very, very well. Nice solid breakout today, good relative volume and good volume in general. The reason for this is because of its OpenAI holdings, right? So the reason that we're going crazy today and that we're up today is because, for those living under a rock, AMD partnered with OpenAI, therefore good, right? Anytime you say partners with OpenAI, your stock's gonna just scream higher. And 30%, I know for some of you like you degen guys who trade like really junky stocks, you look at it and say, well, 30% isn't amazing, right? It's not. It's only up 30%. That's not a big deal. It's a big deal when it's a market cap company as large as it is. The amount of dollars that have been added to the world because of this move is huge. So, if you think about it like that as a market cap move or a dollars move, then it makes a lot of sense, right? So we have this high up here, and we're struggling with that now. But Microsoft, this is going to move because people want exposure to OpenAI. Same reason that AMD is moving. There's one of them, CoreWeave is one of them that moves with OpenAI chatter. And the reason for it is you can't invest in OpenAI. Everyone wants to, but by the time OpenAI becomes public, it's going to be a $1 trillion plus company, probably the first like over $1 trillion IPO, and you can't get exposure to it. Well, us normies can't get exposure to it. Big PE investors and venture capitalists, they can get as much exposure as they want. So what these people are looking for is exposure by proxy, right? So how can I get exposure to OpenAI as a normie? Well, Microsoft is one way. Now we have AMD. Now we have CoreWeave. And you better believe that there's a lot of funds that are just taking everything that has any sort of OpenAI chatter with it and buying it together. So even though the point of this is, even though it may not make sense, and it doesn't make sense, you are now, and AMD is now going to be tethered entirely to Microsoft and the AI trade as a whole. It's just going to be. So you just need to know that. You need to know, okay, these things are going to be moving together. So Microsoft is moving fantastically, but it's now just tethered to the same thing. It's now, you're basically going to be trading AMD the same time you trade this. Sorry, energy drinks here. NEOG. NOG Corporation. Starting to get interesting here. See, I really like these low base plays, and I've been talking a lot about these, and I know I see one of my bigger holdings being mentioned. I'll talk about that in relation to this, is that any company that is priced for death and doesn't die becomes interesting to me. I want to see more. I generally want to see over a year of sideways consolidation and then a break of that in order to get interesting. And the reason for that is that there's these periods in market cycles, and we're in one now. Again, I'm an old man. I've seen a bunch of market cycles. We are in a market cycle currently in which there was a lot of companies in 2022, 2023, specifically SPACs, new IPOs that opened up and died due to poor management, due to increase in financing rates, due to all kinds of things. There's a lot of companies that were good ideas and were good investments and then IPO'd maybe a little early, right? Maybe the management sucks, again, whatever it is. And they were priced as if they were going to die. A lot of them did. Bodybuilding.com, Bird, Ride, Lodestone Motors. A lot of these companies died. And the ones that didn't, those get interesting to me. So this particular setup to me looks good if this particular setup doesn't die. So what do I mean by doesn't die? Well, it needs to base for a period of time and then push higher. I would almost put Intel in the same category right now. Full disclosure, I'll always say this when I own some. I bought some Intel after. I didn't get it before, unfortunately. After the news came out, I got in kind of like the $30 area after the socialism news that, right? Hooray, socialism. This is the kind of setup I want, right? So being mentioned in chat here as well, and something I mean a fair amount on my Stock Twits feed if you want to check it out. Full disclosure, I own an unhealthy amount of this, is this outlet. And I started to buy it as it broke out of this kind of $5 area. And I've been kind of buying all the way up, and I'm looking for it to break 10 to buy a little more. Looking to see if this gets to 21 at least. 30s, right, seem reasonable, but this 21 area is this low and this low right here, but you can see the same setup and a longer setup. So this was a company, the reason I know about this company is because I have 2 kids and I bought one of these for each of my kids, so I've already given them a crap ton of money. So I want 100 times what I've given them back. And it's the same type of setup. This company was, it says $100, but it's a D-SPAC, so it was probably 10 when it was up here. And then they came into some trouble with the FDA. The management just is awful, and the thing tanked and lost 90 some odd, 98% of its value. So this is obviously a company that is left for dead. There is the assumption that this company would not make it. It would be bankrupt and you would lose everything, right? When that doesn't materialize, you get a couple things that happen. One, you start to get value investors that get interested. These are those guys who actually look at the income statement and the balance sheet and all of this fundamental stuff that me as a technician and a quant, I don't care about. And they start to say, okay, there's a fair value for this company. It's not 150 and it's not 0. So it's somewhere between those two numbers. And in this case, they kind of chose around $4 or $3 to say $5 in that area. They said that's what we think this company is cheap. And just by doing that, you create these low bases where these guys, I don't want to compare them to Warren Buffett, but they've all read all of Warren Buffett's books. They have a value in mind for a company. When it gets there, they buy. When it pushes off of that, they leave it, right? So they're constantly buying and then they're leaving it. And that creates this type of price action because they won't chase it higher the way I will as a technician. And right as it moves lower, they're just going to be buying. So that creates this floor. And then eventually what happens is if they're right and the company starts to turn itself around and give more and more signs of not dying, which is all it needs to do, it doesn't need to be the greatest company in the world. It's never probably going to go back to 150, but all it has to do is not die. That's why I'm thinking 21 right down here is fair. And the more it does the not dying, the more it starts to push up. And then as it starts to push up, you start to get different traders and investors involved and interested. You start to get momentum traders. You get breakout traders because it has a really long base that breaks out. There's a lot of algorithmic systems that just chase things in uptrends, knowing that things in uptrends continue to be in uptrends. Now, I'm going through this long diatribe because the difference is the I'm not buying things. I didn't buy it here. I didn't buy it as it was tanking. I didn't hold it for 2, 3 years doing nothing because it's dead money, and dead money is horrible. I bought it because it didn't die. It was priced to die and it didn't die, and now it's starting to drift higher. So that's why I'm starting to buy this. So, right, this NEOG, this looks the same, where whatever's happening, this thing is priced that it's going to die. It's down 90% plus, and I have no idea what this company does, and it's starting to base. So two things you want to see if it's going to do this: not die. Call it a zombie company, call it whatever you want, but it's got to start breaking out. So it has to start showing that there's some amount of relative strength. If you want to get into the fundamentals, you want to see these recover, right? So in all of these periods, it's losing tons of money. You want to see it not necessarily make money, but just stop losing so much money, right? It's like, first you have to, like, you suck, then you suck a little less, then you suck a little less, then you break even, and then you start to make money. And as long as that trend is starting, then you start to get this area where the value investors start to get interested. As it comes in, they look to buy, so on and so forth, right? And then if it starts to break out, so I wouldn't be interested in this as it's shopping in the middle of the range, because, to use our example, you could have been excited for this breakout 4 or 5 times, and it's only when it broke this part of the base that it had been spending over a year in. This whole base is like 3 years long, and it spent 2 of these years in this base right here. Only when it started to break out there did I start to get interested. So same with this guy, it'd be the same thing, right? Give me another long period of time, and then you just start to set alerts on the way up. You don't care about it until these alerts are hit, right? Say, hey, if it gets through that, that's great. APLD, yeah, there's not a lot of technical analysis to do on stuff that's just screaming to new all-time highs, right? You kind of just, you hold in tight and you just hope things continue. You hope they crank higher. This one has just been one of those really high flyers that you just can't get in the way of. It looks great. Now, a little bit overextended to hit all-time highs. So I would expect a bit of resistance up here. I would expect a little bit of a pullback, some sideways chop, some nightmare action. That is what I would expect. Doesn't necessarily mean that is what's going to happen, but that would be reasonable to occur. So if you're holding it, again, just kind of expect that that's probably what you're in for. Again, no one knows for sure, just guessing, but likely in for some sideways consolidation, but that's not a bad thing, right? I always like to bring up analogs, right? Same with Ethereum. So Ethereum rocketed to all-time highs, and ever since then, since August, it's done nothing. Hasn't rejected all-time highs substantially, but it's just been consolidating. It's just been chopping up in that area. And if it breaks through that zone and hits new all-time highs, great. You have that in play, and you're just kind of making sure that you're not getting really super excited, and you're just kind of letting it occur. You're letting that thing happen. And that's kind of what I think here. I would just I wouldn't be buying it up here by any means. And I also wouldn't be shorting it up here, right? I would expect, if it's going to happen, what's another good example? Hood is another good example. Got up to all-time highs, pulled back quite a bit, but, sideways consolidation and then breakout. So I wouldn't be disappointed if I was holding this thing and then for a number of days or weeks, it just consolidated sideways. But it's not a train that I would get in the way of, not by any means. Toast. Yeah, so this was one of those examples. I don't think I got this one. But this was a perfect example. Whatever this toast company is, I already have it drawn out, so I must have noticed it before. It did the same, right? IPO'd and then just tanked. Most IPOs sell off. It's like 80 some odd percent. You can look at the numbers. IPOs that undercut their IPO price in the first 6 months to a year of existing. Most of them do. And you think about why, Why is your company IPOing? You really only IPO for two reasons. One, you need more money, right? You need to raise money. That's why I never get excited and I never buy things off IPOs. You need more money. So you IPO. You say, I'm running out of VC money to get, so I'm gonna get some of that sweet, sweet retail money. That's one. The other one is I have management and early investors and they want out. Other than that, why IPO? You're not hearing rumblings of an OpenAI IPO because dude's making out just fine, doesn't need more money. You can get rid of your IPO shares in something like OpenAI anytime you want. And for the whole needing more money, Sam Altman could open up his window in his office and scream, "Somebody give me $1 billion," and a money bag would come flying up and crack him in the face. He doesn't need, so they don't need funding and they don't need to get out of their position. So there's no IPO. So just like a lot of things, Toast IPO'd, just crashed right off the open, but then spent, if you go this way, so 700 bars. So it's 252 bars in a year. That's roughly 3 years of price action before it broke back out. So you didn't need to be the guy to catch the bottom. If you just bought the breakout, it still doubled almost from the breakout point. This is another good example. Now, right now, it's just coming back in. This, to me, is the line in the sand. I know it's a long way away, but you don't want to get back into this zone. If you get back into this zone, it's just kind of disgusting mush from there. I don't know what that is. AMAT. All these are moving together, right? When it comes to AMAT, when it comes to NVIDIA, when it comes to AMD, they're all kind of in the same boat. Now, NVIDIA sold off a bit off of this OpenAI news because it's no longer the only child. It's the best way to put it, right? If you're the only child, you get access to all of the resources of the household. This news with AMD said you're not the only child. There's another kid, and you got to split your money with that other kid. That's what's happening there. But they're all going to move together. So you look at MU. By all intents and purposes, it is. Was it? No, it was AMAT you were talking about. But MU works the same. Huge run, almost a double, 46% from there, and then almost a double from the April lows. Very clean line in the sand, about 214, 215. It's kind of like that APLD where we're getting up to that all-time high. I wouldn't short it up here, but I wouldn't buy it up here. If you own it, I think it's you pop in a trailing stop somehow, and then you just let that thing go entirely. ARC-G, the genomics side of ARC. Eesh, that hasn't been doing nearly as well as the rest of ARC. It's got to get through 31. 31's the level for ARC. If it can get through there and hold above it, you're probably fine. Problem is so many of the charts look like this, where you're up 2 weeks in a row straight. And it's very hard to know what to do in a stock that's up 2 weeks in a row. It's very hard. Like, what do you do? Probably nothing, right? Like, you look at a stock like this, you're not buying it here, you're not selling it here, so what are you doing? And the answer is, again, probably nothing. I'm just looking at this and I think that's a nice looking chart. It's got a huge resistance up ahead. There's obviously some underlying strength here. You just need, for me personally, I just can't chase a stock that's ripped from like 25 to 30 in 5 days straight up. There's some day that we're going to chill out. I don't know when that day is going to be, but it makes sense that it would be here that we would get that resistance. So rest a bit, pull back, then go through there, and we're good to go. That's how I would look at it anyway. Now take a look here at Grab. So Grab is the, if I get this right, Grab is the Uber of, it's not China. It's Vietnam, I think, if I remember correctly. They're like the Uber or the Uber Eats of Vietnam. Someone correct me if I'm wrong. Uh, another example, and again, give me these ideas. Right, you can see I've drawn this out, but this is another perfect example. Okay, you see it over and over again, and this doesn't work in all markets. This works in markets like this, where um, crap companies are given freedom to save themselves. I think is a good way to put it, right? Like, that outlet that we talked about, it was given freedom to not die. It could very easily have died. Wouldn't have surprised anyone if it did. And if the tight conditions of the the thing that almost killed it, the market that almost killed it, if that didn't change, it would have died. Now this is another one. IPOs at $16 in 2022 and then falls all the way to 2. So falls 87%. And then for 3 years, 700 bars, it's done nothing. And it's just consolidated completely, chopping, boring sideways, which is great. That's right. That's what you want to see. It goes to show that there's some amount of value investing that occurs that says we are in that area. And this is the area that makes sense. Some value investor saw this and said, $12, you're insane. But I don't think it's a zero. I think it's worth a shot at $2 to $3. And then in that area between $2 and $3, they started buying it. They started just kind of chewing it up, which is perfect, right? It's exactly what you want to see. And from there, it starts to move higher. So this is exactly what you want to see. I think SEO, Singapore, they're mentioning in chat. Singapore. I knew it was one of those, how it's like everything has an Amazon of and a Google of. I think I knew this was one of the, right, this is the Uber of this. I think I had a buddy who was talking about it. I think that's where I know it from. But yeah, just didn't die, right? Left for dead. Could have died. Should have died, probably. Didn't die. So now you start looking at it and you say, okay, what are the targets? Well, all-time highs are usually out of the equation, right? Especially, I'd say all-time highs are usually out of the equation if you've done stock splits, right? If you've been to the point where you've started to do a couple stock splits, you're probably not getting near all-time highs again. Stock splits are generally speaking the kiss of death, right? They're generally speaking, it just means, for those who don't know, right, you have to stay over $1 to be listed on the NASDAQ. So if you can't, you got to do a bunch of funny games, and quite often you got to do these weird financial games to stay listed, as opposed to just being a good company. It means you're probably done, and not in all cases, but in a lot of them. So, right, breaking out of this base, one simple thing you can do as a technician is you just extend the width of the base, and that is your first target. So easiest way to do that, just do a little lesson here. First of all, always logarithmic your charts. People, come on. Let's start a movement where we start publicly shaming people who use arithmetic charts instead of logarithmic. Means I should probably explain the difference. A logarithmic chart just, takes whatever data range you're looking at and does it by a percentage instead of just a random arbitrary thing like a number. Like the difference between here and here, percentage wise, is going to be the same as the distance between here and here, percentage wise, which will be the same between here and here. That's why, like, if you go to, this might be another good, just because I remember this being down. If you look at that, right, that's the arithmetic chart where each of this divider, this is just by $20 regardless. So if you keep doing it by $20 regardless, when you get down here, you can't see the price action. But if you do it logarithmically, it means that the difference between here, right, this number and this number will be kind of 100%, which will be the same between that and that, which will be 100%, which is the same between that and that, which is 100%, right? Sorry, where were we? Graph. right? So how you can express what do you think is going to happen, and that's why the reason you have to be on logarithmic charts for it is because you need these lines to be on a percentage basis, not a dollar basis, because that'd be silly. Is you take this, and I just drew a line, and you can either duplicate it, control copy, control V, or you can just grab it and then you apply it to the breakout. And you say, okay, the breakout is above this high right here. So I'm basically just saying this percentage move, the width of the base, I'm just applying the width of the base to the breakout. That's it. So if the base was 100% in width, I think if it breaks out, it could do another 100% in width. That's it. And that gets you a target of around 750, right? That's why you could do the same thing here, and you just take the width of the base. This is from here, and then you just apply it to the breakout. That gets you around 21, which lines up with these prior lows right here. So that's why my target for this guy is 21. That's why my target for grab would be about 8. It's hit that. So now, what do? Now, if it hits that target, what do you do? Well, you could do a fib, fairly simple, and you could say, okay, let's just say it gets back half of it from its all-time highs to its all-time low. Let's say it reclaims 50% of that, which seems reasonable, right? It's fallen this much. It can maybe bounce halfway. That is $9-10, right? You can do the same thing here just for, again, to show you guys the reference. So let's say it goes from all-time highs down to all-time lows. That's all the way up. It's $80, right? But I'm out at 21 on this one. OPTT. I don't see anything in this name. It's just kind of consolidating sideways. And I think this is one of those that, yeah, anytime you zoom out on a chart and it's gone from $5,000 to 64 cents, that's usually a massive red flag for me. They generally never go back. It looks great today, right? I can see why you're watching it today. It's upgrade, but it's inside. Let's do this quick. It's inside this range, which is inside this range, right? So you're just stuck within the middle of a range here. So 88 cents, maybe $1.70 after that, but that just looks like kind of range bound junk to me. PYPL. This is another just dead name, right? And this is why for this, I need the base breakout, right? I want this base to resolve higher, and it's just not doing that. So I talk about this all the time, right? And I'm not, I swear to God, I'm not pumping this stock, but I just keep going back to it. Look how long this was in this base. And then even grab, same thing, 3 years. So if you bought this thing, say you even bought it, you know, never at the low, you never get the low, but let's say you bought this one near the low. You bought it at $3. Now you're looking like a genius. Now that it's doubled to 6, but you had to spend 1,000 days, like 4 years, doing nothing. So the way I look at it is, okay, so you doubled your money after 4 years. Great. What has the market done in 4 years? What has the market done since 2020, 2021? So you're really not doing that much better in the market at that point. So this is why when I look at things like PayPal, could it get out of this base and start to grind its way higher? Could PayPal eventually hit all-time highs? I don't know, maybe. I don't study their financials, but I don't know, it's reasonable, I guess. It's not the craziest thing in the world for PayPal to maybe get back to all-time highs. It's not the wildest thing that I've ever seen. But it was $70 in May of 2022. So you spent over 3 years inside this base. And I just look at it with everything that's moving, right? Everything that's breaking out to new highs. We have psychedelics, PSIL, another big investment of mine. We have psychedelics on the move. We have, I don't know, rockets. We have rockets sending people to Mars. That's hitting a new all-time high today. We have robots. We have AI. We have all these things. Why would I be too interested in kind of this kind of middling company that's just stuck in the middle of its range? For me, I look at this and I say, okay, well, we have this upward trend line at 90. Set an alert at that and never watch this thing till it hits that price. Because you're just in the middle. Why go for things that are just stuck in the middle of an overall range, not doing anything, tying up capital when there's just so many things that are on the move right now? And that's cycling, like XBI. This is just the biotech sector as a whole. Look at this over the last couple days. I need things that are moving. I don't want to predict them to move because it's killer to me to have. I would rather lose money than to have dead money. That's why I want to get into something. I want to take the trade. I want to push it and then go from there. Just that simply, right? Get me my surge, get me some sort of catalyst, get me something that's breaking out of a long base, and then as long as it's moving, I'm okay. But just hang out in something like a PayPal that hasn't done anything for 3 years, well, might as well put my money in the bank and make 5% on it at that point. Penguin Solutions. Why not? Sure. This one at least getting close. This is a better example, right? We have a very clear resistance up here at 30 bucks, and we're gapping up into that, right? A long way to get there, a little overextended to get to 30 bucks, but we're up there. We're at the high end of that $30 type range. And if it can break, that's great. We've got an all-time high above it at 36. That's a pretty decent, like 20% pop to get up there. Long-term chart shows me nothing. After that 36, pretty much all-time highs. But this one looks better because it's up at that range. But when you move 10, 20% to get to a big range like that, I would not be surprised to see some number of days or weeks of consolidation before we end up breaking and pushing through there. The Chad coin. Chad crypto. Is it yes Chad? Is that the difference? There's lots of Chads. This is part of the problem. Chad wrapped in ETH, Chad wrapped in Sol. And I'm not disparaging. I'll say it's probably, if it's this one, you're done. Chad. If it's that one, you're also done. I don't know. The fact that I just can't find it on any known exchanges makes me say no. And again, I'm not an anti. I own a bunch of Fartcoin. So I'm not anti-meme coin by any means. I actually do technical analysis on these. But most of them I can find on normal listed exchanges, right? Pengu looks amazing, to be honest here. I just can't find that particular one. SPY, again, what do you want? It's hitting new all-time high after new all-time high after new all-time high. That's amazing price action. It's exactly what you want to see. Keep going. Have at it. It will come to an end at some point. Just doesn't look like it's now or today. Today has already been a super active day, and I wouldn't be surprised if we just hang out here. We have no economic numbers because down in the US, I guess the government's closed, so there'll be no economic numbers for a while. So things are just going to meander on based off of what's happening in individual stock news. Today, if we're talking about today for the SPY, I really think AMD holds the tail, right? Because this is the reason that we were up so much this morning. So we just need this to at least hold on or resolve higher. If we lose AMD, then we'll probably lose the SPY too. But just hang out near highs inside day, which just means the high isn't higher than yesterday, the low isn't lower than yesterday. You're just nothing on the short-term chart there today. LMND. Lemonade. Again, I want to keep reiterating these because I want you guys just to one day I log on here and you give me a bunch of these because they work so well. But same thing, IPO'd, just got destroyed. IPO'd, then went down 95%, consolidated for a long period of time. And then when it finally broke out, you had a nice 80-90% run. So this one right now looks great. It's just consolidating against this prior high. So if you lose 48, you're probably wrong. And then over 62, it might begin its march higher. See if it can get back to an all-time high or something, which would be great. But again, more of the same. And it is this specific market that you're seeing these in. So this particular strategy is working well in this particular market, and it won't be like that forever. It's just, this is what's working. That's why I want to see names. Like, again, another one that I had from around the $5 area, and I bought a little bit more recently, is this MindMed, psychedelic company. Same thing, right? Gaps down 2022, moves dead sideways for 2 years, and then breaks out just over and over and over and over and over and over again. Like, right? You can see lots and lots and lots and lots of them. Just a second. Sell. Okay. Just sorry, I'm a quant. I'm a systematic trader, and I have quant, and I have a robot that's going and doing stuff. And it just, for those who want to know, just shorted a whole bunch of plug for some reason, just right here. So fantastic. I got to figure out why in a second. GPUS. Hyperscale Data Inc. This is a scam. Sorry. Holy smokes, what's this number? Yeah, just a $700 billion a share company that is now 59 cents. There's nothing suspicious going on here, SEC. Definitely don't pay attention to the $700 million a share company that is now trading at 59 cents. Yeah, this is a scam. This company is more than likely going to be zero in the near future. Yeah. So, sorry. That is my opinion. That is not financial advice. 1 for 35 split. So again, for those who don't know how the market works, this has never been a $2 billion a share company, right? What happens is, I kind of described it earlier, is if a company stock price becomes under $1, they have to do some shenanigans in order to get it back over $1, or you're not allowed to stay listed on the NYSE or the NASDAQ. You get delisted, you get sent to the pinks. If you get sent to the pinks, which is the pink sheet, so it means you're not good enough to be on even the most garbage exchanges. You're a pink sheet company to stay on, to get on, or if you are on the pinks, it essentially means by any institution you're uninvestable. So any large institution, you could be the best company in the world, they cannot touch you. And that's part of the problem with the marijuana sector that's having right now. Because it's federally illegal, there's a lot of the best marijuana companies in the US that cannot be listed on any exchange. So even if a fund wanted to invest in them and wanted to have exposure to the marijuana sector, they can't by law or by prospectus. So what this company did a whole bunch of times, as it just continued to crash over and over and over again, was they had to play this game. They had to go in and they had to tweak their price. They had to play a little game and say, okay, let's do a little jig here, a little jag there when it comes to our finances. And in order to stay listed, We have to do this. We have to play these games. We don't have a way to become a good company. We have to play these little games in order to potentially just stay alive. And doing that once, maybe when you're getting hard times, that's one thing. And still not ideal, right? Still not something you want to play with. But when you have to do that over and over and over again, so that your company looks like it was worth $1 billion a share at some point, that means that your company is just awful and has no way to get any outside investing money to keep its price over the smallest possible increment that it can. And that's why it's saying that much. That's why it's saying $1 or $1 billion or $2 billion a share. And yeah, and it goes all the way down to 60 cents. So in the short run, if you're talking about like a day or something, I don't know, maybe this thing could recover, but it's just it's just awful, right? This is not something that I would ever suggest anybody touch unless you're doing like a short-term little trade for it to go to like 60 cents to $2 and then you're going to be out. Cuz you got to know that this company, every time their stock price spikes, they're going to sell you shares. That's just what they do. They sell you shares. Their stock price goes down. They reverse split. They sell you shares. I bet you the CEO of this is being very handsomely rewarded, um, but no one else, right? No one else in the company is having a good time. EB, Eventbrite. Oh, I don't know what I haven't even looked at the price yet, but I hate these guys for when I go to these events. They make you install a stupid little app, and people can like hunt you down on the app. Um, yeah, I don't know, right? Bad company. Everything is going up right now. This is what, when I look at a company like this, everything is going up. Semis are hitting new all-time highs. Financials are hitting new all-time highs. Quantum computers are hitting new all-time highs. Again, robots and rocket ships and AIs and computers and genomics and all of this stuff. And then there's this event planning company that's just shit. And it's at all-time lows. And I just feel like now I'm just being a downer. But like why would I put my money in this when I could put my money into anything else? I always encourage everyone to go just look up, just go ask an AI, ask Perplexity, give you a bunch of studies that compare buying stocks in downtrends versus buying stocks in uptrends. And the stocks in uptrends do well. If you just simply bought stocks as they hit 52-week highs and then sold stocks as they hit 52-week lows, you make money. You slightly in some markets outperform the indices, right? So even these ones that are in low bases that I'm looking for them to break out of, they're hitting new 52-week highs just by breaking out of the base, right? Grab, when it broke out here, that's a new like 3-year high. That to me is way more interesting than, again, just randomly just buying companies that are at lows. Hippie, that was called High Tide. That must be a weed company, right? Looks okay, right? It's in the high end of his range. Got a long way to go. Now, full disclosure, I do have some MSOS, just like I have my psychedelics. I've got my weed, and I keep joking that the stoner trade is on. And it depends on this consolidation and how well this works. If this works and breaks out to the high side, then you're probably going to be okay with any weed company. The other thing that I keep wondering about the whole weed thing is, now that Trump's done the tweet that says, right, weed company is good, right? So it's before, and I watched the video. It was politically intelligent where he framed it on old people need CBD. And then that's kind of the way to allow people to get good with it, because these same old people have been fed all their lives that weed is evil and it's going to kill you and blah, blah, blah. Now that It's not the worst thing in the world. You can uh, you can end up doing okay by participating, right? But I wonder if now that that's out and you've done okay participating in his tweet, if when the legalization actually comes, it's old news because you kind of know now it's on its way. There's no way there is no legalization, or there is no way that there's no rescheduling or decriminalization or whatever you want to call it, because the big guy has said old people need CBD. So he's only going to say that if he's going to get old people access to CBD. So, right, in all of this case, I have to go, okay, is it going to be a sell the news event in which when it actually occurs, the the sell off happens? So just keep that in mind if you're playing in wheat stocks, is that at some point, right, these things are eventually it will be a sell the news play, and people remember that these are still bad businesses. You can grow this. They call it weed because you can just grow it in your yard. You can just go throw a seed in your yard. I live in Canada, and we can we can grow it outside. Yeah, so I just wonder. Again, I'm long, right? So I obviously expect there to be some pop. Um, However, I just think it might be one of those sell the news events in which when the legalization actually strikes, that's it. TEM and Nancy Pelosi play. TEM. I've been watching this one for some time because of this resistance zone right here. I've taken a couple trades in it and it's worked out well. Again, you can never bet against the GOAT being Nancy Pelosi. Right? Cheers, cheers, cheers to her. She knows what she's doing. Her portfolio is amazing. Um, the the thing about this one is that it's so tied up to two things. It's tied up to, for those who don't know, I just took a quick look at this company when I was looking at it. They You're using AI to make drugs. That's kind of their whole shtick, right? Is they're going to use AI to do medical stuff, which I think, right, way better than making AI slop TikTok clones, right? Use AI to cure some diseases. I'm 100% with you. Uh, it's a very crowded kind of play though, because it's the only one that I know that's doing it. However, the chart looks great. Right? Very simply, you hit a high and then you pull back, and it's always a lower high. So it keeps hitting this high, but when it pulls back, it's more and more shallow. That to me makes me think that this could potentially break out. But then it's like, okay, well, what's the target then? Right? I look at this and say, it gets to 100, then maybe through 120, maybe. I don't think it's the base is too big to do the trick that I gave you guys where you measure the width of the base and then extend it out, because that would be like a $1,000 target. And maybe it's just got two volatile sectors tied into it. It's got the volatile sector of AI, and combine that with the volatile sector of um, biotechs, right? So you're combining AI with biotechs. I like it. Again, you can't bet against the GOAT, but it just feels like this might be one of those that is already very well covered. So, you know, I just don't know. This one's a little less interesting to me, but it's hitting new all-time high. Buying stocks that are hitting new all-time highs makes way more sense than buying stocks that are hitting new all-time lows. So, sure. MCRB, someone has, and then we're going to do another quick look at the market, and then we will call it after this one. McRib, is that what we're calling this one? Series Pharmaceuticals. So this one's kind of getting interesting too. Back to the low base chat of, right? So it's 2023. It's been putting in this kind of sideways action since 2023. It's right back to where that price is now. So that definitely qualifies as a bit of a low base. So if we get back up to $30 and then break, That's interesting. I don't know if I would buy it here just because it's still in the middle of this range, but it's getting close. It's getting to that area where it could potentially break out and through. So I like this one a lot better, but wow, what a fall from grace here. 99, a rare 99% drawback. So this would be something I would want to at least know something about the company. Again, I'm no fundamental analyst by any means, but I'd want to know what's going to cause this stock down 99% in order to save itself. Right, it had to do a reverse split from 1 to 20 right here. So, right, I would look at the financials, how much cash do they have on hand, when do they have to come back with their hand open to investors, that type of thing. I would never, as soon as I see this little S, I'm not, it's not going back to all-time highs, but man, if it breaks $30 and it goes to 60, what else do you want? So let's do a quick, I want to look at two things real quick before we go. First is Bitcoin, just because I'm watching it on a screen down here slowly creep back up to all-time highs, and Ethereum right behind it, and Solana right behind that. So a lot of crypto looks good. So make sure, even if you're not a crypto guy, I understand people who have an aversion to crypto. They're not interested in owning anything or having anything to do with any cryptocurrency. It's silly to me, but sure, have fun. I'll trade anything. But it looks like we're on the cusp of another crypto breakout. So if you wanted to look at, actual companies as opposed to crypto itself, right, we've got the Ponzi scheme of MicroStrategy looking good. You can have your BMNR or your SBET. These things, if Ethereum starts cranking into all-time highs, you better believe these things are going to come back in play. People are going to be interested in these treasury companies. There was a Tron one. What QMMM? Oh, sorry, that one's under investigation by the SEC, so we'll leave that one out. But take a look at all those treasury companies. That one's interesting to me. And then lastly, I just want to take a look at the SPY and just talk about how we are still under all-time highs. We need to see that break fairly quickly. This is a 30-minute chart, so we could just be entering into a range here. And, just final closing thoughts is everyone's making money right now. And if you're not making money right now, right, it's every stock's going up. And just understand that there are cycles. Like, a lot of you may not have been here for 2021, where everybody made money, where people were selling pictures of rocks for millions of dollars. The people who are still here after 2021, I'm speaking from experience here, are the people who gave back the least amount in 2022, 2023, right? I'd love to say, oh, I just make money all the time. It's fantastic. No, these markets are easy to make money in. I'm a systematic trader. I'm a quant. And these markets, it's just you buy anything and you're doing fantastic. At some point, who knows when, could be tomorrow, could be 5 years from now. I have no idea. But at some point, this fun is going to come to an end. So spend your time coming up with plans of when to take profits on these things, and understand that you will not find a way to do it perfectly. You will either let money go, which is you'll sell something and it will rip, or it will come back a bunch before it triggers a trailing stop. And in both of those cases, you will feel like crap. But the only thing that will make you feel worse is having a whole bunch of money on paper, and then that comes all the way back to where you bought it or zero. And there is a time coming, again, could be tomorrow, could be 5 years from now, who knows, where the fun gets sucked out of the market and we go kind of back to normal, where we just don't go up every day. And just make sure you have a plan, because if you have raised any amount of cash during that period of time, then when the cycle begins again and we have a new bear market and then a new bull market, at least you'll be able to kind of put that money to work. So as always, thank you all for coming out, and I will